Okay, hello everybody. My name is Scott Berthel. I'm going to do some technical analysis today on Apple. Um, Today is Wednesday, February 3rd, 2016, and it's the end of the day after the market closed, so 5:15 Eastern Time. Disclaimer: this is for educational purposes only. Thank you for attending. All right, now let's look at Apple and weekly chart. And I know this is really busy, so I'll try to get rid of some of it. But what I wanted to look at was some Fibonacci areas. So if we took the high 134.54 on April 27th of last year and we go down to the flash crash low of about $92 and you do your Fibonacci um, range or retracements on there, then your reaction coming back up here, a high of 123.82, that is right around this 38th percentile mark. And so if it starts here and it goes down here and then comes back up to there, uh, that's basically a 61.8% retracement. And if it falls back down, then what we're going to look for is a break of this 100% and then down to the 1.272 extension, which comes in right there at just about $80. Okay, so I wanted to show you that. We can get rid of this for now. The next thing I wanted to show you was this, and this is the symmetry from the high 134.54 down to the flash crash low of about 92. You take that move and then you mirror it from this latest high of about 123, and then the 100% move of that gets you down to 81. So there's two things on a weekly basis that puts us down at about 80. And I know that's not what Apple people want to hear, but that's just the way that the charts are reading. Now, the next thing I wanted to show you, and let's see if I can, we'll hide this. No, we'll just remove it. Is this line right here, this white line. Now, if we look at a monthly on it, then this white line goes all the way back to 2009. Okay, and if you notice, it ran up and it held support. It did break down right there, and then came back. Um, so, but basically that was this line of support, and it's not looking too good. Okay, so we'll forget that for a second. Let's go back to the weekly. All right, so here we are on our weekly again. This is our trend line from this high to here, like that. And then I just mirrored it and put it down here. Let's do some, I want to show you some timing, Fibonacci timing. So say we went from this high, December 14, we went past one high and got to the second high. And then, so if we did that, then the 100% comes in right here, and then the 200% comes in right about here. So we got some timing there. Then we also have some timing here, which is this high to this high. So that's here, and then there's another high right there. And then again, we got here. So what I'm basically trying to say is that we have some major timing coming in this, what's it, third and fourth weeks of February for Apple. So let's take a daily look and see where we're at on the daily side. All right. Again, this is our channel going down. These are support areas at what's that 105.50, 101.50, 96.50, 92. All right, so basically right now price has been underneath this green trend line coming down. It poked its head up here just to get to the Bollinger Band middle line and then came back down. But you'll notice that the red line right here, the blue line, and this purple line, those are the Bollinger Bands. And it's showing that the volatility is really coming in. You know, it's been hanging around this area for a good, 3 or 4 weeks. And so the volatility is coming in. So we're starting to get a daily squeeze. It just means that, it's like a coiled spring. It loads up and loads up and loads up, and sooner or later it has to release all that energy starting from like back here. Now, will it? The big question is, will this trend line hold? And will this bottom and this bottom, will we just bounce along here until we get into the timing cycles around the 23rd? We also have one around the 12th. I think I must have deleted that, um, but that's what we're trying to figure out is, will this trend line hold and push it down to our 80 mark that we talked about earlier on the weekly, or will it hit, just kind of dwiddle around in here until it hits this timing and then, shoot back up? We're going to play it that, let's this is our roofing filter. Here's an example. This is Eller's roofing filter. You see how it kind of came down and then shot back up? And here's the squeeze, an example of the squeeze I'm talking about. You see how the distance between the red and the purple line, it is decreasing. It really decreased there. It kind of stayed the same. It stayed the same and then decreasing until finally, boom, you had to pop one way or the other. It popped up. And this Eller being right above the zero line gave you little indication that it would go up and not down. And so if we look at it the same way, then our Eller again is the longer term Ellers are above its zero line, which is right here. So, there's a decent chance. Well, you see how it was above here and then really above here, but the price still couldn't get up here. I mean, it had enough juice to push the Eller up to there, but the price went nowhere. And then lots of times things happen in threes in markets for whatever reason. But if you go 1, 2, 3, then this isn't showing a whole lot of strength. The average true range over a 3-day average shows again that it's right around its average moving price. So it's just kind of just chilling. It's just sitting there. It's trying to decide what to do. Until I get a break of this trend line here and a close above 101.32, then I'm not gonna say, expect it to get back up to here. Until it breaks that, then we're just going to have to assume that it's just going to keep on following this trend line down, and it might drop down to 80 in the month of February. But we have some major timing. This is what I'm thinking, that you got a low there, that the lows should be coming right around here. So, but I wouldn't, you could buy it up to 98.63, but after that, I'd be selling it. We'll keep a watch on it and see what happens, but that's what the charts are showing right now. All right. Now, one last thing. That's a closer up picture of what's happening on a daily. This is an hourly, and it basically shows what I wanted to show you here was, really how long it's been in this range from 101 down to like 92.39. All right, it's been in this range since January 6th. So it's been in this range for about a month. Um, and it just keeps on coming down. It's tried to get above it here, it couldn't do it. It tried to get back up here in this case, and it couldn't do it. And here we are again. So it's just really hard to get excited about it until it breaks above here, or at least above the trend line to get back up that way. So that's it. That's my technical analysis. Thank you very much for watching. I appreciate it.